starting video 2 of 824. We start with GXO. Great trend. We need to zoom out to see perspective. Oh, okay, so the great trend is not so great. It's going into a prior fail zone. Well, looking left, anything above 57 has not been good to start. So if I'm not long yet, I probably don't want to be starting longs into this gap above. Maybe by the next dip. That's the obvious statement from here. And they just reported, so that catalyst is out of whack, off the schedule. Look at how much out of whack this area is. It's just not an easy starting point here. HIMS, buy the dip on this one. Great business on paper. My concerns, I've said it every time I mention the stock, is regulation. I think they're a little too loosey-goosey, and one day it might come to bite them. We went long on multiple dips. I think we recently went long as well. So I would buy dips or hold it for the super long term. The fact that they do this kind of stuff bothers the hell out of me because the P&L is amazing. And then they do this kind of stuff. So that makes me want to trade it less or invest in it less. I don't trust the investors that are in it. They're not very committed. Well, speaking of which, everything I just said applies here as well. Hood. First of all, what the heck kind of P&L is this? Please give me a little bit more stability so I can forecast the financial aspect of it to see if it's expensive, if it's cheap. It's hard. Whoops. Okay, so the rally faded miserably, and then they broke out from it, and look at this unbelievable burst. Now, I think this is because they found a new way to make money. Gambling, etc. So after a couple of quarters in the books, maybe 3, then investors will quantify that, and then they would have to weigh against what they expected. So up there, it's not a starting point for me. From a trading perspective, you can trade around 100, or actually 99, and 114. 99 and 114. So if I were to borrow one of these boxes, okay, not an iron butterfly, I'm just borrowing this box. That's an area of play for this week. Let's see which one they take out first. If they lose the 99, maybe they go to 88. If they take out the 114, they have a shot at 124. That's the trading comment. The investing comment is exciting. But oh boy, I mean, how much of that excitement has already been priced in? Like, it did not take any red ticks, just straight to the moon. Intuit, great P&L, weird P&L. I don't remember what I read about the earnings report. It is a buy the dip moment. Did we buy the dip? I don't remember. It is definitely buyable. And I would not buy calls, although that's the fastest way of making money. I would rather sell a put spread and buy a call spread, which is a little bit less aggressive, but you also make money if you're right. Not as fast or as much as buying calls, but pretty respectable. Okay, so the support zone is from here all the way down to like 590. So they can take their sweet time stabilizing. But with the help of the market, if we continue to go up, this one can rebound to 710. Hiccup at 690, 710, and 730 are doable. But it's going to take a lot of help from the market. And the support zone really doesn't start until 620. Okay, this one has an opportunity to bounce up to 44. And then they already hit target 1. They should be here, target 2 potential and resistance. So actually the resistance starts at 41. And you must hold 35. 35 is support. You don't want to go to 34. Must hold this zone. And you do have support, so you should expect to hold this zone. So that's the trading comment. The investing comment, it's on you. I don't invest in companies that look like this unless you want to take like you do homework and you say, okay, this is one of the winners for the long term in this segment. Aviation company, no income, same. I have a feeling it's the same person. 1650 is a problem, potentially. And of course, the easy one on top, anything above 18 should be a problem. I'll put it right here. And the support is really into 11 zone. Coca-Cola. So they tell me Coke was red on a super green day. That's good. That makes sense because Coca-Cola was treated as what you call it, a safety trade. So in the day when market did not think about safety, they were looking up, then why wouldn't they sell a safety trade? But the XLP I don't think was red, and that's where Coca-Cola lives. So for now, Coke is stuck. Sellers above 71.50, buyers at 68. Don't lose 67 because you're going to go to 66. So you're stuck in a very tight range. Earnings is not until for 60 days. So I'm not sure what you want from me here. Are you looking to short it? It's not an obvious short. Lily, it's definitely not an obvious short, but it's definitely not an obvious long either. So this redness is the target of them losing the yellow. So their job is to get above 780. For as long as it's not above 780, Lily is in danger of losing 600. I'll repeat that. For as long as they're not at 780, they're in danger of losing 600. I wouldn't short it for that prospect, but that's what I see in this chart, Lily or otherwise. Finally, some green ticks in Lulu. If I'm long, I'm not panicking if I haven't panicked yet. If this rally fixes my longs, I would exit. For example, I do have a credit put spread down there, and this bounce gives us a lot of breathing room. I promise you I didn't look at it once, so I know it's in trouble. I know it's a good stock, and I put it in a smart spot. Now, in 11 days, they're going to report earnings. I might exit before the earnings. Okay, it depends. We'll see. The trade is for October, I believe, which gives us some breathing room with time. But I don't want to be stuck buried, so I might buy some defense. If you're asking because of that, come to me during the live room so we can get a smarter defensive position for it, like a debit put spread, shorter term, that would offset the longs. My position is not very large, so I'm not inclined to do a lot, but if you do have a substantial credit put spread in Lulu, then you need to. Also, if you sold naked puts in Lulu, then you need to protect yourself, and that protection is easy. You just buy a put for shorter term to bail you out in case they drop 20%. So then you're completely protected. I've done that before. The opposite of what I did with my bearish position on Palantir. I went into the earnings short, but I bought calls for the earnings, and those calls made me a lot of money to offset the losses that I had, but they allowed me to stay in my short, and now the stock has given up its gains, so that was perfect. I would do something similar for the Lulu if I sold naked puts. Come to me and we'll talk about it. It's better than going back and forth with email, David. Okay, LYFT. Not an obvious entry point, as exciting as this breakout looks. If it gets to 18, it could go to 2150, so I don't blame you if you're chasing the breakout. But honestly, why didn't you buy the dip into the support? Because the support looks pretty strong below 14. So if it does dip to 14 or 1450, buy that call on the dip. Buying a call into a prior fail is expensive and doesn't give you a good setup. Now, if you absolutely must do it, do it. From a trader's perspective, I like to buy dips, not rallies. So either wait for them to break out and buy the dip. Trust me, it almost always happens. Or buy the dip so they can break out. Either way, you will end up buying a call on a downtick rather than an uptick. You will end up paying cheaper calls. Okay. MICIDs, not an obvious entry point, shortable between here and 327. When I say shortable, I mean like a credit call spread like the one on top. Did we do that? Okay, yeah, we did. Yeah, if you're asking about it, that's how it works. It's rallying into a resistance zone. And this is a defensive stock. So if the market continues strong, this is not one of the favorite stocks. They love the stock when the market hiccups. So that is an okay position for me. If you're asking about it, there's nothing to do there. Meta, monster stock, monster P&L, monster business. Don't short it. Hi. Don't short it. Do not short it. This is a crazy stock. The baseline, August base, right there. It's there. We're approaching the baseline. I can't promise you we're going to be inside the baseline. Now, the only weird thing is that the market's at all-time highs, and this one isn't yet. So it's at a small resistance area that I'd labeled small resistance. You can add one at 768, and 780 is going to be major. If you want to sell a credit call spread to short it, do yourself a favor and sell a credit put spread to go long it as well. I wouldn't be too one-sided with this guy. It looks like it's stuck for now, so that should help you if you're in trouble. Micron will move with NVIDIA, so be careful. I no longer have a trade in Micron. All these lines, all these dotted lines, they give you a visual of where Fibonacci ratios lie. So if you see a cluster of them, like all these white ones up here, you should know that once we get there, the machines, the algos, will see a bunch of Fibonacci ratios there. So they tend to slow down whatever they're doing. So if we're rallying into these white lines, it's going to be a resistance. So between, what I'm saying is taking out 129 is going to be difficult. And that would be a great opportunity for more upside, like 136. Conversely, falling into these yellow lines is going to find support. So losing 106 is going to be difficult. And if you do, you have backup and backup and backup. So you're kind of stuck. So I did have a position in it. And it was on the way down, I sold puts and put spreads. And on the way up, I sold calls and call spreads, and everything won. So I decided to take off the risk to see what NVIDIA is going to do. And then I'll reopen the risk after the NVIDIA reaction. The company is an okay investment for the long term. The chart itself, if I take out all my lines. Okay, so it has had its moments. Super strong support below 105. Like super strong. Even stronger below 84. And there's a weak spot inside of here. Like, why not consolidate more around 90? The breakout from this trend is almost at target. So I wouldn't be surprised to see it at 136. That would be my exit spot. Looking left, that was death. I did short it up here. I took some heat, but it ended up being a monster win. The fundamentals are good, but they're not amazing. So it has a good outlook, but not amazing like they priced in up here. So I think I gave you enough to work with. ServiceNow, good P&L, good trend, no issues. Why here? Earnings in 60 days. So you have 2 months with no headlines. You have super strong support below 820 and super strong resistance above 940. So you're kind of stuck. You're stuck even though there's some pretty open gaps at 940. So rallies into 940 are exits. They're selling rallies and making lower lows. In this environment, can you believe it? That's just outrageous, but it's happening. The support zone is actually at 834. Like when you fall into 835, why not go to 834 and close it? Close what? This green box. There was an open candle in there. So they closed most of it. Why not come down and touch this? You have violent reactions below. So this one is doing what it usually does, and it's performing well. If I was short, I would exit. If I wanted to get long, swing trade, investment, whatever, it's a decent starting point in this environment. The only risk to it will probably come from the market itself if they ever decide that they want to. Correct. This one is a decent long. Credit put spread, debit call spread would be the least impactful to my pocket. NVIDIA. Okay, you've heard me say, if IBM is at all-time highs, that was months ago. NVIDIA needs to be at 180. It's in 180. And it's still not that expensive. Earnings are in 3 days, so I wouldn't do anything into earnings. I would definitely buy the dip with both hands and both feet if it happens. I believe the last time they reported, it was a red initial reaction after the saying, oh, okay, no, it's a good company, let's go. It's not about the quality of the report. I can assure you it's going to be awesome. It's about the message. So I said also in the past few months, they should do something else. They should venture into some robotics or something. So at any given earnings report, maybe they open the door for a new source of income, and then hold on, it's going to be a bumpy ride to high heaven. Buy the dip in the meantime. Come to me the day of the earnings. We will look in the options to see if we have any clues. I would be long confidently for the long term. I wouldn't start longs all in. And I would definitely put it on my agenda to buy dips. What else was I going to say about that? Oh, they have been they've been raising alarms about something like some rhetoric in China. So maybe people are going to are positioned too quietly because of that of late, although it looks pretty strong. So maybe they have a relief rally after the earnings that they didn't mention anything about chip, whatever it was called, H2, whatever chip they have. If they don't mention any concerns there, like I'm expecting them to say something about it. And if they don't, then oh, okay, maybe there's no problem and people will buy it. I'm not so sure. Treat it like a good, solid investment. NVO was a buy, but not knowing the business, I personally stayed away. I did discuss it a lot with people in the live room. So this is what's been going on before. Like if I copy paste, this is what's going on. I hope this doesn't go on right now. It doesn't make sense. The P&L is just too good. So maybe this is it and they're going to go to 64. Headline stock for sure. So resistance at 62. I would own this investment as long as regulations doesn't get in the way. OKLO. No income. This is what's happened before. If they're trying to repeat it, you should expect them to try to get into 76. 76 is resistance. In fact, if you look at not the earnings candle, but this candle right here, that's your candle to trade. You can see the bottom of it is that line I just drew, although I wasn't aiming for it. And the upper ends is that cluster there. So that candle right there on August 13th represents your range. And this is a 4-hour candle. I wonder why I have it in 4 hours. Anyway, so between here and 80, you should have sellers, and you should have buyers into 56 or lower. Areas of contention, like 42. Let's say the market crashes and this one gets to 42. It should be a good solid entrance. Open. Okay, someone please freaking explain to me how this P&L results in this chart. What in the world is going on? They must have said something or delivered something. Price to sales 50. Statement of income. What in the world? Yeah, no. These numbers don't make sense. Do research on the P&L and the debt and all of this, and then come back and trade. Yeah, this is not for me. I would never trade this stock unless I'm investing like $2 on some trade setup. Yeah, I don't know what to tell you. Don't short it. It's probably going to 16 with this stupid market. This doesn't make sense whatsoever. I don't know what's going on here. This is the for real estate, no? Okay. Yeah, I think this real estate boom that we think is coming is a complete farce. There's no way we can have a real estate boom. I don't care what the interest rates are. We'll see. Not for me, not a starting point. Looking here, it has failed at 644. That's enough time on this one. Pfizer. This wants to break out. Not going to be easy. So on paper, this market is somewhat amateurish. And they will look at this and say, whoa, look at the size of this cup and handle. This thing is going to 32 or 31. They are correct in that sense, but they also ignore all of these sellers that are here, which is also part of the technical. So the opportunity that lies above 26 is to 30 plus, easy. And the ability to take out 27 is not as easy as it looks. So I wouldn't start longs here. Buy the dip or let them pop and then buy the dip if you're chasing that. Or sell a put to buy a call and you would be long for free if you want to own shares. Something is weird with this income. Maybe it's COVID related or something. I'm not so sure. Like the income from the vaccines or something. Oh boy, YouTube is going to demote my video for sure, me saying those words. Anyway, has happened before and it will happen again. Be careful with this one. Looks pretty darn good. I don't think it's that easy. Paramount Group. I don't know what to say. You have sellers into 8. Various levels, and the breakout from 540 wasn't that pretty. It left a lot of weak spots, although there is support from 5.8 on lower. Palantir, I'm still short, and just purely based on valuation. That's a stock that I was a fan of and went long for us multiple times before at 7, 9, 12, 14, multiple times, and then I got out in the middle of the 20s. And never got a chance to enter back in. Never had it on my to-do list. It was expensive since then, but now it's outrageously expensive. Even after this drop, it's still about 120 price to sales, and that's my metric. When the price to sales goes back to human life, then I would be interested in it. What is that? It like 9 times cheaper than what it is right now. So 2 things you can do. One is really level up the income, the sales, and way more than 30%. Or get the price to drop, or a combination of both. I need, when the price relationship to the sales per share, I need that number to be at least not bigger than NVDA, which is 5 times cheaper, more. So anyway, I need this one to be cheaper. The trend is phenomenal, and this is where you buy the trend if you're a trader. It's falling into a nice trend. They're going to try to buy it and get a higher high. So it might be at 205 in the next few weeks. I don't know. Or at 130. So 35. So that's the two paths. And the hiccups, okay, there you go. So the purple path is if the bounce fails to break out of 171. The red box is resistance, and it's a candle resistance twice. So I will take out these white boxes. That's for the earnings, the visual noise, and leave you with the good base. And look, they took out base 1 perfectly. Look how well they bounced off of my box, which should tell you that we draw good lines. I didn't draw this after the fact. And they have base 2, and base 2 is super strong. And they avoided triggering the white arrow. And but they still need to get back above 170 to completely avoid it. I have confidence they can try it, especially if this week is positive. I don't know what this is, so let's look at the chart. I can tell you that they're selling everything above 218, whatever this is. Small company, 300 million. And they're buying, your best support is at 184, 186. The investment mart, I don't know. You're going to have to do homework. Qubits, again, do your homework on the viability of the company in the sector. Is this one of the anointed ones? Maybe you buy a little bit of this and a little bit of the other one, not knowing which one will end up winning better. One of them will. 1150 zone is your pivot. So if 1350 doesn't hold, I think they can go sub 12 easily. Rallies into 17.4 are going to be met with sellers, 17.4. And of course, above 20 and a half, you're going to go to 23. QXO. Okay, no income, no income, no income. Boom. 2 billion? What? Roofing? Yeah, what is that? Look into this. No income, no income, 2 billion. Make sure to know what the hell is going on there. And the chart itself tells you there's a seller at 2150. There's a buyer at 1750. There's a backup buyer at 1540. Okay, backup seller at 22.50. Reddit, not an obvious entry point. Weak until they hit 175. So good P&L, good everything. Popular platform. If it drips into 180 or 175, that's a solid buying zone. If you've been waiting for an entry point and you've been hesitating, that's your opportunity. A dip into the base before the earnings. Shorting. I've seen a couple of people that wanted to short it. I want to caution you. Shorting it just because you feel like it. Okay. Area of resistance, they took it out. We can repurpose the box and say, okay, so this is an area of interest. Drawing a blank. Okay, it's an area of interest. If they come down to 175 or lower and you're interested in it up here, that should be a slam dunk. I don't think it is a slam dunk for me. But you do have a lot of buyers into 150, 145. If you look left, they had the same comment. I had the same comments probably around 125 as well. So you do have a solid support zone below. It's not an easy long from here after the rally. Rocket, not an obvious entry point. Just ask the other two people that bought it up here, this person, that person, and here comes you. Now, the exciting part is that it could go to 2130 and it would still be a short. I wouldn't short it, but buy the dip mode is yes, into 1650 or lower. If you're long, your opportunity is to get to 22, but you failed here twice. Maybe this third time is a charm. Rockwell, okay. This is a weekly chart. It shows like they're trying to break out on a weekly chart. This is a daily chart. It shows that it's kind of like the market. So this is like the SPX. If the SPX is green this week, this guy will probably be at 370. If you're long, kudos. You have a long buyer that says, I'm a buyer into 305. It's that long candle right there. And then you have all of this junk here and this junk here. So I don't like that aspect. There's support into 306, but if you lose 306, there's not much below it. You might drift lower a little bit more. I would be in a buy the dip moment in this one. I would be selling credit put spread to go long as opposed to just buying calls. If I own shares, I'd sell covered calls. RVP, Retractable Technologies. Oh, that's a micro cap. Yeah, I don't know what to say here. Sellers at 90 cents, 88 to 91. Buyers at 74 cents. Secondary buyers at 69. That's the chart. Fundamentals, you're going to have to research them. Starbucks. Let's take out these two blue boxes, those for earnings. I think it's overrated. I think the rally was overrated. I think the stock is great. You buy the dip and you have realistic expectations. If they take out 99 on a closing basis, they can get to 104. If they lose last week's low or August lows, they can test the 79, 78. Where they must hold 76, but they should hold 76. That letter S should be bulletproof. If you lose that, I think the market is on a hiccup, which is not the forecast. So you're stuck. Solid buyers below 82, solid sellers above 97. What are you going to do? Not buy calls. Sell a put spread, sell a call spread. Maybe Starbucks is a good iron condor trade. With that, we end video 2.